Can I ask you back to you had mentioned Cisco a little bit earlier. I just want to do a couple of things before we take our first break, because you bought more of this stock. They beat. They got upgraded to overweight at Wells. I know I took kind of a hard turn, but I want to get that in before we take our break.
So I already talked about the macro implications of it. Let's talk about the stock implications. I think the direct analogy here is Oracle. I want everybody to think about Oracle 3-4 years ago. It was a mid-teens multiple. Nobody cared too much. It was a database software company. Then they got into Oracle Cloud Infrastructure, and the stock took off. And the multiple went to the low 20s. I suggest to you, I submit to you that is what's going to happen with Cisco, and it's happening right now. It's been happening over the last year. Josh, I ask you to take a look at it. This is a stock that should be trading in the low 20s, and it's trading at about 16.5 times. It's buying back shares like crazy. It's got a good dividend. And most importantly, the fundamental drivers, they are growing their business. They are beating, raising. There's nothing negative to say about this company.
The fundamentals are remarkably strong, and what's going to happen now, we identified it at the end of April as finally becoming a quote-unquote momentum trade.
Yeah.
And you're going to see a lot of funds follow suit and begin to acquire this company based on momentum itself. We're in from April 30th. I thought the report was excellent, and there is obvious AI spend on network.
Cisco is a really great example of the point I'm trying to illustrate. The way we used to think about that stock is it's effectively a call option on GDP. If global economy is growing faster than normal, Cisco will have more orders. If the global economy is slowing, Cisco will have less orders. I think the stock, at least, has broken out of that paradigm, and they're now thinking about Cisco as, you guessed it, a more defensive version of its former self. It's no one's going to stop their internet usage.
Right.
This is the most, no business. Oh, it's an economic slowdown. Everybody use the internet 20% less. So it's not going to happen.
So Cisco is the reason that I can be kind of like negative and, Debbie Downer and worried about the future, but still fully invested. So we've owned this for years in our disciplined growth strategy. The thesis has always been it's returning to a growth company, it should re-rate. But this is why I can be uncomfortable with a 21 times multiple on the market and comfortable being invested at 15 and change times here. So that's how I marry my pessimism with fully invested.
It's very infrequent that you can identify the pivot point. It's happening right now. The multiple is re-rating, and it should. It's happening right now.
And I'm so grateful we were early.